Hey, hi. I just want to show you a little bit about the ADP report that actually just came out today, which is on the 6th of July. Um, and of course, the whole market is red. They were estimating around 221,000 of job increase, but they ended up getting a double. Of course, there is way to look at it, which is if you think that the job in employment is going up, there would be a higher tendency for inflation happening, and whereby, of course, if there's inflation, then the Fed would continue with at least a one or two times, or even more than two times of rate hikes, and of course, that will force a recession. And usually, recession means that there is job losses and then people spending power shrink, and then the price of things or services will drop as well. But it may not be necessarily the case all the time, because job increase actually sometimes means that people will still be saving, and then it has to also tie up with wage spiraling as well. But of course, in this case, it says that wage growth continue to ebb in this same industry means decreasing, and hiring likely is cresting after a late cycle surge, saying that because after this summer, all this job employment coming up, the subsequent months that could be slowing down, and most of the job employment added up are all from private employers. In fact, um, if you look at banks and um, other big companies, there's actually like the segment was fragmented, with manufacturing, information, and finance showing declines, and there is an 8,000 job reduction month-to-month basis for big companies. So just I wanted to show you these clips from CNBC. Yeah, this is the point. So as you can see, my take is yeah, there is a likelihood that a soft landing will happen, whereby there will be hikes, maybe one or two more times, whereby the market has priced in all those information. And of course, companies with mountains of debts, whereby refinancing is due this year, next year, or the year after, we could be in an era whereby yeah, high interest rates will continue to be there at least like 4% or 5% for the next for maybe even this decade. So I feel that if you invest in a cash rich or company with good cash flow, it shouldn't be a problem. And I believe that this jobs report, of course, we always say that good news is bad news. In last year and the narrative for beginning of this year as well, whereby we wanted to see an actual recession, and a recession would mean that the Fed will stop hiking. So I think that's probably uh, something that I would say this is not really a bad news. It's to say that recession is not yet here with strong unemployment, and probably there is a soft landing whereby recession may never happen, and especially for the US, and not sure for the Europe and other countries. So there you go. This is the ADP report that came out in the summary.